Okay, let's talk about Apple. This is a chart, and it's really simple. You don't even need a college degree. I don't have a college degree. I don't even have a high school degree. Look, a chart is a gauge. It gives you signals. It follows the money. That's all it does, is simply follow the money. Let me give you a very quick lesson. These lines are called 200-day moving average, 50-day, and 25. They're moving averages. You don't even have to know what a moving average is. All you know is it's a white line, yellow line, and even the purple line you don't even have to follow. Just use the white and the yellow. This is your stock right here. This is your what we call candlesticks. Anytime a stock breaks through either the 50-day line or the 200-day line, that is a sell signal. When you have, these are called stochastics, a fancy name for nothing more than buy and sell signals. When this is at its peak, right here, see this peak? When this red line is crossing over that white dotted line right here, that's telling you the institutions, the big guys, are pulling their money out. When it breaks through one of the lines, that's a confirmation. And when it breaks through two, that's real confirmation. So you know to get out of Apple. It has nothing that you don't have to know anything about the company. Nothing. All you know is the money is saying it's getting out. That's a sell signal. And look at this. Look how it dropped. Now, unfortunately, in your mutual fund, they keep adding to it all the way down. They keep buying more of it, which is ridiculous, instead of shorting it. So if it's dropping, you should be able to make money. Let's say this was a 20% drop. You should have gotten a 20% return by shorting it. But guess why they tell you not to short it? Because they don't make money when you're selling stocks short. They only make money when they're buying stocks for you. So they don't make a penny. When you say to them, sell my stock short, you make money, they don't. And also, they make money when you're losing money. So when the stock is going down, what the company does is short you. So they're making money as you're going down. And they want your stock to drop because they're making money as it drops. Well, you're going to change that. From now on, you're going to know when to sell by this little line right here, this little peak. And then once a stock sells, what we call a consolidation pattern. Once everybody throws the stock away, at some point there's just nothing left to sell. Pretty much, and you get this sideways movement. So you get these points, 1, 2, 3. That's called a base. So that's telling you it's building a base. And then you get these buy signals, see? Right here. See this buy signal? We bought it right off of this buy signal right here. That's called the W formation. You always buy when it forms a W formation. See, it's an actual W. Look. See that W? It's an actual W. And what we do is we try to complete that W. See it? So here's the buy signal right there. See it? Then as it's moving up, they always correct. They pull back. And you wait for the next buy signal. See, there's another W right here. Here's another buy signal right here. See it? Another W. And then the last one we just added to our position right here. Now we're waiting for this to come back down. See, right now this is a sell signal. See, it's telling you to sell. The problem is your mutual fund guy, he didn't buy it down here with us. He's buying it up here. The reason he always buys it up here at this peak and he never buys down here, he bought it up here too, by the way, at this peak. They never buy when they get crushed. They never buy on sale. Why? Because they go to buy on sale. They know you're going to get grumpy because everybody's talking how bad the stock is. And for them to go buy it, they know you're going to be mad at them because you're going to say, why would you buy the stock? Look how bad it is. They know the best time to buy a stock, the easiest time to push it on you is when you're happy. When you hear how the stock is going up, they know your greed, your fear of not getting in is going to get you. So they know to go after that greed, the fear that you're going to miss out. And that's where they nail you up here instead of you buying down here. So we know by looking at this guy right here, it's telling us to sell. There's the sell signal right there. See it? So we won't buy this until this turns and gives us a buy signal. In fact, we've sold it short. So when this comes down here, when it's down here, it turns over, the red line and the white line here, right? When that red line goes right through it, comes down, well, guess what? This is where we're going to buy it again. This is a buy signal. This is a sell signal. And then when it pulls back, it'll form another W. You see, it'll form a W. You'll have a W formation forming. See, when you get that new W, right, then you buy it. It may not be all the way down here till you get a W. You might get it down here. All right, but you always look for these W's. See them right here? You always look for the W. There they are. Okay. Now, let me give you another example of stocks that are horrible stocks that everybody threw away. They're called our dog stocks. We buy stocks that nobody wants, okay? Let's take a look at it. These stocks here we bought in the last 2 weeks, and we've made 30%, 40% on these stocks, okay? All right, let's look at this. This stock got killed, Sears. Here was our buy signal right here, and we bought it right here. We caught this all the way up. WNR, we made about 30% on this one here. See, here was our buy signal right here. See it? And we caught, and here was our W. See, look, here was your buy signal right here. And this stock got killed. Look, there was the right-hand side right there, and here's our buy signal. And when we bought it, we put a stop in. So you put a stop in here so you don't lose more than $100. If you lose more than $100, you get stopped out. So you protect yourself. And then as the stock's going up, you trail behind it. So let's say you use a 5% stop all the way up. It trails 5% behind your price. So any given time it comes back more than 5%, you get out. See? These are all big winners. These we just bought recently, see? And these are stocks, again, these are all stocks that nobody wanted. Look, can you imagine? See the stock? And I had everybody buy it right here. We caught it right there. Now we're taking most of our profit. Look at the buying that came in. And we caught it just before that buying came in. All right, WNR. UNG, this is the one Kramer told everybody to get out of. And he told everybody to get out right here. And I said, no, get in. Okay? And look at this. We made a lot of money on this one. There was our buy signal right here. See it? There's our buy signal right there. We bought it right on that down day. But we put a stop in. I knew I wasn't going to lose more than $100. You always make sure you never lose more than $100 when you enter. That's all. Give it some room. And now it's getting ready to sell. See how it's crossing over? So now we're selling it. And the chart always tells you when to sell. So again, I can go through a lot of these, okay? So join the gang. Now we're at this 10,000. Everybody's buying stocks. Why didn't they buy when we bought? Think about it. When the Dow was right here, this is where we bought. After the market crashed, we bought right here off of this buy signal right here. See it? That's where we bought. You know where people are buying now? Right here. They're all jumping in right now, right here, in your mutual fund. This is where we're selling now. And see your W right here? You could have bought right here when this was on the bottom here. All right, you had another W right here. See it right here when this was on the bottom here. So learn how to do this. You don't need all this help, okay, when these are strangers. Manage your own money, for God's sakes. I'll show you how to do it. Join the gang for $39.95. If it's not worth $39.95 for a month, I don't know what to tell you. See you on the charts.